Today's session is going to be simple enough. I called it an Ask Me Anything session. That means you send your questions to us, anything you want to know. You had heard from Kevin just now. I don't think that's comprehensive enough. You will need to know more. So you ask questions to Kevin, all right? But before I start this panel discussion, I'm going to run you through what's going to happen. Other than asking questions, I have 3 questions for you. And you need to do me a favor to scan that QR code on the screen later, and you cast your vote, and you tell me what do you think about the market. And for that, I will pass the questions to the panelists. I will tell them, get them to answer and explain further. Okay? So without further ado, I think I will have the panelists to be on the stage right now. Number one, if you remember us, if you have been with us for a few years, you must have seen their faces. And the past few years, I call them different sports car. But this year it's no longer F1 team, isn't it? Let's go back to basic. For the first panelist, I will have Mr. Chai Kin On from the Equity, Stocks and Fixed Income team. Welcome. Give him a big round of applause, guys. Thank you. Follow up next, I have another big shot. I have Tao Hong as the General Manager from Bond Supermart. Welcome, Tao Hong. You guys love him, I remember that. And of course, just now you have heard from him for the past 25 minutes. We have Kevin Kaur, which is a CFA holder from my research team. In FSM1, we also promote gender equality. We love to have ladies on the panel. We will have Miss Lim Chin Yen from the Portfolio Management team, also a CFA charter holder. Welcome, Tao Hong, Chin Yen, Kevin, and Kin On.
Glad to be here.
All right. Initially, we wanted to have this venue to be set in Putrajaya. But after seeing what happened to Maduro, we want to change to Pavilion Bukit Jalil. It's safer here. If the US troops want to board to KL soil, probably got traffic jam. So don't worry about it. So let's start this whole panel discussion sessions. I'm gonna throw you the first question first, okay? Have you scanned your QR code already? I have already started the poll. If you scan this QR code on the top right, you will be able to cast your vote already. Please do so, ladies and gentlemen. I will need your participations. When I was walking into the hall, I have seen happy investors. I have seen new investors. I have seen housewives. I have seen doctors. I have seen lawyers. I have seen angry investors. If you are angry about it, please cast your vote first. Now, the first question is I have asked you, where do you expect the best return in 2026? All right? Can we show the result on live? So you will also get a feel about the sentiment. All the panelists, you can also see the results. Anyone? Cast your votes as soon as possible. We have leaders right now, a tight race between Asia, China, and Hong Kong. Surprisingly, nobody likes Malaysia. Any votes for Japan? You love traveling Japan, but you don't invest in Japan. Okay, let Kevin talk you to that. Any more? Still moving? Asia, China, and Hong Kong. Okay. Oh, okay. China takes the lead right now. Surprisingly, US is only 3 at the 3rd place. Surprisingly. You guys, for those who have not voted for US, you guys must have earned a lot of profits from the US already. Took profit already, right? Okay. Okay, so I think I will do a soft closing right now. Okay, soft closing for this first poll. Apparently, right now, Hong Kong and China is where investors think is going to be giving the best return this year. Okay? Now, I'm going to soft close this poll. You can continue to ask questions. But when you are posting your questions, let me ask first. I have tons of questions to every one of them. Okay? But if you feel that one of the panelists are not speaking enough, right? Just put their name into in your Q&A. I will see that. I have my iPad on my hand. All right? So we can see that China and Hong Kong, I think you need to swap back to see their faces. All right? Yeah, because we got a big crowd to see the faces. Now, let's get started. Now, Kevin, before we go into China and Hong Kong, all right? Just now when I walked into this hall, someone asked me, hey, Sherman, how do I predict the market? How do I foresee all this volatility? Am I going to see Trump invade Greenland? Trump invade Iran? What is your take to this?
Hello. Okay, hi everyone. Again. Sherman, you're gonna guarantee me after I answer this question, Trump wouldn't come and find me, right?
No, don't worry. You are not that significant.
Okay, well, how do we predict the market? Will Trump control Greenland or whatsoever? How? To be honest, my answer, I don't know. Because, like what I mentioned, in my first slide, if you still recall, the words that I keep on using, eventful. The market can up because of multiple events. The market can down because of the same events. So what I'm going to tell you here is you can't predict the market, especially the market movement, you can't. So the next question, how are you going to profit from that? A simple way, you find the controllable factor within the uncontrollable factor. What is the controllable factor? The earnings visibility, the fundamental, the value, the belief that you're investing in. That's the controllable factor. For example, I believe in AI, I believe in let's say IC design, I like NVIDIA. That's why I invest in NVIDIA. That's the belief. That's the controllable factor. By the way, it's not recommendation. How about the uncontrollable factor? Trump, he is an uncontrollable factor. I don't know, will Trump come to Putrajaya and catch me or not? I don't know, seriously. But since you can't predict that, why you do so? And I want to urge everyone here, if his next session is so concerning to you, that's probably is your time to revisit your portfolio because you are not diversified enough. My last word, your ultimate goal to invest is invest in a portfolio that you can sleep well with. That's all from me. Thank you.
Not your last word yet. Don't worry about it. My GM just texted me. Encourage them to ask you anything, except can you guarantee returns? If someone do, please send them to our legal department. Okay, noted, boss. Next question. Now, thank you for responding to that. That means basically you are saying that don't try to predict the market, but instead prepare yourself for your portfolio. Is that what you're trying to say?
Yeah, thanks for summarizing.
Okay. So when you are explaining, another question came out. You asked, you love precious metal, you love gold. Anyone invested into gold last year? Please raise your hand. Only one. I don't believe that. You all are Malaysians. Please be honest. Invested too much until you cannot raise your hands, huh? Gold price has done tremendously well. Okay? Now, the next question is going to be to you and to Tao Hong. Now, can gold price go further in 2026? Can investors go buy more or go all in or not? Kevin, still you first.
You want a long one or short one?
I want a medium one.
A medium one, okay. My answer, I don't know. But, again, how I view gold as an investment? I will view gold as a portfolio diversifier. Means that probably I already have 90% of my portfolio invest into equities or any other assets. But at the same time, I want to hedge against inflation. I want to hedge against the uncertainties. That's the point of time for me to buy gold because I want to hedge. I will not view gold as a place that I want to gain capital growth. Why? Tomorrow, if we experience, Trump come and hoo-ha again, Xi Jinping come and hoo-ha with Trump again, gold price might go higher. But can you predict that? I don't think anyone of here will have the ability to forecast, to foresee that kind of events happen. So that's why I don't view gold as a capital growth tool. I view gold as a portfolio diversifier. Thank you.
So do you recommend people to take profit? To trim? I don't want you to hedge your answer. Give me an exact answer.
It depends.
So this is what analysts do, you see? No definite yes or no. But it's because it's very, very hard to tell you. And because we do not know your risk profile. But when you mention about gold, so when we want to save something, store the value, we go for gold. But Tao Hong has been the biggest advocate about bonds. Tao Hong, tell me, why should I not consider gold and buy your bonds?
Okay, let's take a step back, right? Whatever Kevin has said just now is the actions that you might do when you think about that asset class. But what is exactly gold? Right? Go back to the fundamentals. What is exactly gold? Gold has been around us for thousands of years. And the basic thing about gold is that nobody ever figured out how to produce more golds. Can you follow me? Right? The alchemy of gold. Have you heard about that? Nobody ever in the history of the world produced more golds. It's all dug from the ground. And that is why there is an enduring demand for gold. Okay? And what is gold? Gold is a collectible. Collectible means that it does not produce any yield. It is not a productive asset. So think about that. When you invest, what do you want? You want something that gives you cash flow. You want something that has earning powers, right? But gold doesn't give you that. So the reason and the rationale that people invest in gold, what's that? It's because people believe that it is a storehold of value. Remember that. The only reason that you buy gold is because you believe. And when I say you believe, the price of gold is what the market would bear. It means that how much you and I is willing to trade at, right? It's just like oil. What is oil? When oil was $60 a barrel and when oil was $120 a barrel, are they any different? What oil does? No. Same with gold. So remember, when you buy gold, it is for a belief that it is going to be a storehold of wealth. There's a lot of background story. When Ukraine was invaded, that was the turning point of gold, right? Because people look at the world and say, if I put my money in US dollars, somebody's gonna use it against me when I step on their tails, right? So that was the turning point of when gold actually picked up. And I don't know, I'm just like Kevin, I don't know where it will end up, but I feel that people want an alternative. People don't want to be told, my reserve asset is gonna be controlled by you. So remember that. And the reason for bonds is very simple. Bond is just a promise. I give you the money, you promise back to give me back my money. Simple as that. And in our careers advising in bonds investments, I would say more than 90% of the time, if you lend your money to a legitimate business, they will make good on their promise. Right? This is our experience. I can't deny that there's always going to be default. Right? Risk and default is always, returns and default are always hand in hand. But the idea is, bonds are very simple because I give you the money, and you promise to give me back the money. So that's my take on gold and bonds.
Thank you, Tao Hong. So you heard him already. If you still believe in bonds, if you still believe in gold, gold is still because of what you believe already. But bond papers are you cast your vote of trust to the company, saying that I know you won't go default, you won't go bankrupt, you will still pay me back. That's why if I were to put this thing correctly, let me know if I get it wrong. When I pick a bond, I need to make sure I have confidence that he will pay me back. Am I right to say that?
The art of picking bonds is not the art of picking stocks. It's called a negative art. Let me tell you what is a negative art. Why is bonds called fixed income? Because the outcome is fixed when you bought into it. You know the bond is paying you 5%, right? Every year it's paying you such an amount of coupon. You put it into the calculator, you will be able to know for this amount of time that you're invested in, you're gonna get this outcome. It's called fixed income, right? So, my train of thoughts just jumped.
You got many trains. Remember to turn your mic to show my trademarks, my company logo.
So your question was what?
Thank you.
Your question was,
So,
I was
so,
just saying-
so basically, to sum Tao Hong out, right? Basically, it's
I was just saying, so
just
engrossed.
need to be very, very careful on selecting names.
Yes, I was explaining about the negative art. Right. Sorry, I just lost my train of thought. So, selecting bonds is not picking winners. It's choosing the bad apples out from the basket. Can you follow me? If there's 10 bonds that's gonna pay you 10%, there's gonna be 5 bonds that's gonna default and not gonna pay you. Your job, and to improve your performance in bonds, you just gotta avoid the losers lah. We say you avoid the losers. So that's a negative art. It's a very different ball game compared to the rest of the team here, right? But I just want to share with you how we think about picking bonds. Okay? Yeah.
All right, thank you. Now, when you are playing with your own trains, right? One question, a general question that I somehow expected to see in the Q&A. Investor with a limited time, what kind of portfolio structure is recommended? The best panel to answer this has got to be Chin Yen. Chin Yen, what is the recommended portfolio structure for someone who has limited time? I assume that you have limited time to monitor the market. Okay, Chin Yen.
I think our product, the managed portfolio, is definitely trying to solve multiple problems from our investor. And lack of time to manage or looking at the market is really one of the things that we want to solve for them as well. Because imagine you do have your own job, maybe you are a doctor, you are looking at your patient every day. So it's like you have your own career to manage. So you don't have time to look at market on a daily basis. So we know investing requires a lot of time to monitor the market. The market itself is very dynamic. The things can change very quickly, especially like Kevin explained just now, there are so many unpredictable factors. Like we don't know what Trump is going to do tomorrow. So all this require close monitoring from a professional team. So this is what we are doing here in FSM1. We do have a dedicated portfolio management team that not only us in Malaysia, but work with our regional team. We do source the best research idea from them. We have different analysts covering different regions and market to give us the best idea to be implemented in the portfolio. So I would say that for the question by this audience, if you have limited time to look at the market, you can definitely take a look at our managed portfolio that do comes with different risk profile. So you still need to know what risk appetite you are. Whether you are a conservative portfolio that you are now a retiree looking for some consistent income, not to go too aggressive, or you are at an aggressive risk profile, you are still young, you can afford to invest more into the high risk asset class like equities, then that would be your risk profile. So we do have different risk profile to cater with client with different needs. But when it comes to product selection, the asset allocation, how much to invest in this US or Asia, because there's no, you don't have the magic number like 10%, is it sufficient, or 20%? We will come out with the formula for you. So as long as you know your risk profile, then you can consider the managed portfolio.
The best thing to have a lady in the panel is this. You always get a very rational answer. So what Chingen basically said is very, very simple. Just any husbands in this hall, it's just like your wife tells you, give me your money, I manage. That's what you basically just said. But it's important to know what's your risk profile, because portfolio structure can mean very differently. For Tao Hong as a bond guy, 100% bond paper. For Kevin as a guy who loves AI stocks, then maybe 90% AI stocks, 10% bonds. Kin On, I don't know, likes sports car, he likes speeds, all the way leverage ETF, you do not know that, all right? So what is your risk profile? You need to ask yourself that. But if you couldn't do that, let us know. We have plenty of assessments forms for you to fill out. Very simple one. You will take less than 30 seconds, you can complete it already. Then Chingen will be there to help. Basically, she's saying like, just fill out the form and leave it to me. This is what you've been saying.
Yeah, you summarized for me very well.
Thank you.
Chairman,
I take that as a compliment.
I want to add something. Of course, I'm a bond guy, but I want to put my word to portfolio allocation, because in my view, a lot of us wouldn't beat the market. We got to come to a realization about that, right? We have our jobs on the side. We are not a professional in the industry. Do you do your own tooth extraction? When you go to the courts, when you're sued, do you not hire your own legal counsel? That's what I'm trying to put across, right? These are the experts, day in, day out. Most of us with a job, I think we forget that the ultimate goal of investing is to preserve and grow our wealth. It's not to grow, it's not to become rich. So my advice is, for most of us, right? For most of us, give your money to Chin Yan, leave it to her, so that you can do what you're best at. Because you need that income to grow your wealth. You need that income to save that income, to give it to Chin Yan so that she can grow it for you. But in order for you to grow your income, you gotta put time into something that you are good at. And I don't think a lot of us here are good at investing. That's why a lot of us here is gonna be average only. So if you're gonna be average only, why not give it to Chin Yan, right? If she can't perform, just don't give her your money anymore. Change into another person. That we have a lot of partners here today that is doing that job for you. That's my take.
Yeah, I think a key things about what Tao Hong has mentioned just now, right? Like participating in the investing journey shouldn't be compromising your quality of life. You should continue to spend your time with your loved one, with your families, but still you are able to enjoy the benefit of staying invested in the market.
Thank you. I was a little bit worried the moment when Tao Hong take out his mic. It will take a lot of time. I'm also worried for Kin On, because he has been like tapping on the sofa, like, when's my turn? Let me give you a good question. There is this one question like, Do you think US stock market will face financial crisis in the near future? Kin On.
I think that is a dead question that you're trying to trap me, right? I think a lot of investors here now already in the US market, but I don't think there will be a financial crisis for US, personal view. Of course, I think if you want a more proper view, maybe you should seek advice from Kelvin or the research team. A personal view, I don't think US, and I don't want US to go into a financial crisis because stocks and ETF is my products. So financial crisis means that there will be no volume, no flow into equities and ETF for my product, right? But my personal view is that US is not going into financial crisis, but there will be more volatility that we're expecting in 226, whether it's geopolitical. I think also on the uncertainty in the economy in the US. I mean, yesterday just released the numbers, job numbers. I think is 50K versus 60, slightly below expectation. But the problem now is that even the Fed may not have a very good idea, where the economy is heading, whether
when to cut rates.
Correct. Where the inflation, whether is it within their target. So, but to sum up my view, I don't think US is going to a financial crisis, but there will be more volatile ahead. Yeah. So I think investors will need to have a strong heart during this time. Yeah.
Actually, Kin On, right? On his desk, because he is from the trading side, he will definitely be able to see investor behavior, like what investors has been buying in 2025, 2026, 2024. Kin On, share with everyone here, what have you recently been noticing? Are you seeing more buy trades in US, or people are actually selling more US, buying more China? What have you been observing?
I think China has been getting traction since second half of last year. But in general, I think people love Trump.
People love Trump.
I think so.
You love Trump.
To a certain extent, I cannot deny.
Okay.
Simply because, when Trump were at this administration for US president, the US equities were all-time high, right? So I think notably, we also seen that a lot of investors actually buy on the headline. So that means that they are no longer thinking what is a risk profile, what is a fundamental like healthcare, defensive sectors, they're just looking into headline because they just want to capture the headwind and I don't want to miss out. Yeah, but I think over the years, we have seen good trend fund flow from direct stocks into ETF, especially in 2025 last year itself. I think the increase in terms of percentage is about over 100% increase in turnover. Of course, arguably ETF was a low base, but that over 100%, that also indicate that investors are now looking into leveraging ETF to achieve, their objective.
So you mean even our clients are buying more and more ETFs nowadays?
Yes, correct.
Where did the money come from? Is it from they sell their stocks, they buy more ETF, or are they selling other products like which?
I think it's a mixture. I think because realistically speaking, everyone have limited bullet, right? You have this much of money, I can't be printing money at my home. So I think I do see a lot of flow coming from fixed income, bond, because we also take a look at bond at the desk. So bond flow, not so much this year. Single stock and bond flow were into ETF this year.
Okay. Someone asked me to ask you if you have any favorite stocks. I can't ask that, but let me tune the question a little bit. Name me 5 names that you always see on your screen. 5 names.
I think would be the M7, the Black 7.
No, I want 5 names. Don't give me anything else. Just give me 5 names.
I think Palantir.
What? Pilates. Palantir. Okay.
Yeah.
Palantir, number 1, guys.
Nvidia.
Okay, expected. AMD.
Yes.
2 more.
And I think 2 more are probably going to be ETF.
ETFs?
Yes.
Like what are the ETFs?
SMH and BOO.
VOO, the one that invests into S&P 500 index, okay?
correct.
The
Yeah.
last one.
And which is a semiconductor ETF, which is SMH.
Okay.
Yeah.
So I have already risking my career, my licensing into this to give you the 5 most common names he sees on his screen. NVIDIA, AMD, VOO, SMH, and
Palantir.
Palantir.
Yeah.
Okay. Kevin, you want to add something? I saw you.
Yeah.
You can't wait.
For those investors who, if your portfolio is full of these 5 names, then probably it's a time for you to diversify to Asia.
That is a timely reminder. If you are full with NVIDIA, I think whenever Trump do something, you are shaking already. Please don't do so. We urge for diversification. So I have already asked this question. You're welcome. Now, for the next question, to ask this one thing, this is the most liked question in the Q&A right now. You guys just want to hear names, is it? You guys don't care the risk. Please recommend one vehicle that will deliver more than 10% in 2026. Who asked this? This kind of question, right? We definitely need to let Kevin to answer. Kevin, name me one vehicle can give me 10%. And after you, right? Tao Hong, you give me one bond paper can give me 10%. Simple enough, all right? Kevin, you go first.
Okay. For sure, I wouldn't give you a name because it's risking my license. But I can give you some of the stocks that drive me.
No, I don't want stocks. I want regions. I want country that can give me more than 10% return. Based on your research, what do you think?
I do think that the Asia regions, especially on the China side, it will have the upside potential.
So Asia or China?
I will go for China instead.
China.
X Hong Kong.
Okay, risk taker. Don't want diversification, just pure China. Tao Hong. Bond paper, more than 10% in 2026.
I cannot do that publicly, but
So can do it unofficially. I know where he stays. I know where is he going to be staying later on. Please catch him. But I want to hear you. Right?
yeah, but I want to impart one skill to everybody. Whatever that we're saying here, you need to take a temperature check. What I mean is that markets work in the long run. It's because companies earn profit and they grow their profit over time. It's not a roulette. It's not that I'm buying into a roulette, I'm betting on a roulette. It works because this is the fundamental thing about economies. Companies grow their profits and they grow their profits over time, right? But in between, there could be ups and downs. And who makes up the markets? It's people who are making up the markets. And what is driving people? What is driving humans? It's all the emotions. It's your greed. It's your fear. Every single thing of that. And the skill is take the temperature in the market. What I mean is that you got to ask yourselves, when I look at US markets, is people optimistic? Is people risk averse? Is deals getting done very easily? All these questions are going to be indicators for you to do what? Just now Kevin said, there's no such thing as predicting the future. Correct? Nobody knows what's going to happen tomorrow. But the least that you can do is to know what's the current situation. There's a very good saying in the market. We don't know where the hell we are going, but we ought to know where we are today. Right? So that's a temperature check for you. And if you want that 10% idea, you can find me behind.
Wow, that's a strong statement. Basically, Tong is buying time. He has no idea yet. We take a pause here. I will go to the second poll to let you to vote so that Tong has more time to think about it. Okay? Go back to your phone and see and vote for this this poll. If you had to choose one for 2026, which one would you be prioritizing? Please cast your vote, ladies and gentlemen. If you have logged out, then log in with the QR code on the top left, ladies and gentlemen. Let's see who wins. I'm gonna give you 15 seconds. Typical Malaysians. I want all the above. I don't want to pay tax, I want cheap petroleum. Still, I want all the above. Okay, thank you for making my job easy today. So I don't have to arrow to any panelists here. Any more? Higher returns. Who hates returns, right? Surprisingly, nobody likes lower volatility. Very little people love stable income. You all don't like stable income, huh? Any more? Okay, still I want all the above. Thank you so much. I'll circle back to the Q&A. All right? Okay, let's go back to the live feed to see the panels. Okay. Now, it's a typical answer. I want all the above. I want stable income. I want high returns. I want lower volatility. I want everything. Okay. Now, before you want something, you got to ask yourself. Back then, let's say last year during Liberation Day, when Trump imposed tariff, the world was ending. You thought it was ending. I want Kin On to share this. When you are looking in your screen, so many buy and sell buttons, bling bling here. What is the common mistakes investors always make in that kind of sentiment?
I think there are two things that almost all investors did, which is watering the flower and cutting the beet. What does it mean is that if you look across your equity portfolio, when you are panicked, you would tend to take profits on stocks that are going up, and they cut loss on, they basically hold on to stocks. They basically don't cut loss. Another worst thing is that I think retail investors are very good at spotting falling knife. Stock dropped 60%. I often get a call next day, bro, 60% down, can I buy? So with that combination, at the end of the day, investor would left with a portfolio that is in red. I mean, red is good for China, but not for the rest of the market.
So sometimes short-term investment becomes long-term investment already, because you hold on to the losses.
Correct.
So do you see them cut loss more, or they even buy more?
I think I do see a mixture of response here, but to be honest, nothing wrong with buying a good fundamental company, right? When a good fundamental company, say Maybank or Bursa, the share price coming down, nothing wrong with averaging down and buying more. But one common mistake is that when market, pull down another 10 to 15 or maybe 20%, then the investors started to question themselves. I should have, buy it now or later. Or maybe investors started to panic, like, this is the time, this is financial crisis. Remember when the Liberation Day happens in the US? Market was having a drop in a few consecutive days. I think that's really fear the investors. But as compared to institutional client or maybe someone in the investment field, they love it, right? Just maybe Sherman be asking us question, but let me ask Sherman one question. So if S&P and Nasdaq or maybe Russell 2000 drop 50% today, will you buy?
Buy.
Yeah, as straightforward as that. What if today drop another 20%?
Buy.
Easy answer, right? But the problem now is 50%, a lot of people will say buy. But to normal retail, when drop another 20%, they will say, maybe I should sell.
I see.
Okay,
Okay.
that kind of mentality.
Sherman, I got a follow-up one.
No. You don't get to ask question. This is my panel. Just kidding. Just.
I mean,
let me know.
I just want to save my license a little bit.
Okay.
To echo with what Kieran has mentioned just now, let me think of one of the quotes from one of the Chinese movie that I've watched before. 人有两颗心，一个是贪心，一个是不甘心。
Me
In English,
translate that in English.
I'm going to do it now. In English, people are greedy and we don't like losses. So to save my license, just now one of the questions is asking me what market can potentially drive 10% return. I'm going to ask you back. What market you can afford to face 10% of losses and you still have the confidence to buy? If you have the answer, that's the place that you should go.
That's a good one. Okay, I will give you that.
Sherman, 30 seconds.
Tao Hong never miss out. You see, Ching Yen very chill one. You see.
Very chill, too chill already.
Later, I will
Wanted
get
to
back to
grab
you.
some airtime,
I will
then
get back
Tao
to you.
Hong came in.
Get Tao Hong first.
I want to add on something. I want to bring perspective into all these things, right? What Kenon, what Kevin says, these are all trading. Let me share with you some. I think there was, I don't know who did this study.
You need to share it quicker because my time is running out.
Don't quote me, but the best performing portfolio belongs to the people who are dead.
The best performing portfolio belongs to the people who are dead.
Think about it. Think about it.
Because no rebalancing, because they don't do anything.
Because most of us, most of the time we will overtrade, right? You gotta find a system for you to help you automate some of this process, I think, right? And one point is, I said most of the best performing portfolios belong to the people who are dead, right? Don't quote me for it, huh? But I lost my train of thought again. Sorry.
Never mind, give me first. I think that part is a bit too extreme. I have some like real life example.
Okay, Ching Yen.
Yeah, so we have been talking about the emotion part, right? The mistake that retail investors tend to make in the market. So let me give you a real example. Those investors who stay with us for quite some time should have known that we have been quite positive on China since last time. But back in 2-3 years ago, we actually decided to downgrade China to unattractive because of the structural change within the country. So during that time, it was quite a bold move, as in we also received a lot of questions from investors like, it just underperformed for maybe few months to 1 year. Do you guys sure you want to downgrade it? But we decided to move ahead and also implement it in our portfolio. As in, at some point in time, we actually removed completely the China exposure from our portfolio. So we do receive this particular question from client as in, of course, it's easier for you guys to do that because it's not your money. You guys don't feel the pain when you cut the loss. But I say that is exactly the point. Because it's not our money, we can manage it objectively. And you can see that we do have a very well-established structure to govern our whole investment decision-making process. We are not driven by emotion, but all the fundamental, the thorough research are driving our investment decision. So we don't fall in love to the stocks or the things that we invest into, but we really go back to the fundamental. Looking back at this country, even though it's now making losses, but if we know that the fundamental is deteriorating, then we need to do something. Despite it's cutting losses, taking a short-term pain, we will still do that. So I think this is the value that we want to add to our investor through our managed portfolio to close the behavior gap.
Okay, hang on. Before Tao Hong.
I got back my train of thought.
Okay. Blend in your answer later. I have one question for you and Ching Yen, but let Ching Yen go first. As a senior analyst and also a portfolio manager, what is the major risk in 2026 that the market is currently not seeing? Tao Hong can add on to that later, but I'll let you go first. But your answer can be slightly longer, but Tao Hong, you only got 30 seconds. Ching Yen.
I would say that the risk part is definitely everywhere, especially when there are so many uncertainty in the market, the geopolitical tension, no longer just between US and China, but also like China and Japan, all this kind of uncertainty. So in iFast, like,
No,
I
Chingen, I don't want you to hedge your answer. Tell me the risk that currently the market is not seeing enough.
I would say that it could be like what Kevin mentioned just now. The part that I really agree is more on the AI part, the AI bubble. So we do think there is bubble because there is a huge part of the AI value chain, right? There are hardware, there are software, there are semicon, different part of things. So we are still positive on digital economy as a whole, but we are selectively positive. There are some part we do think they are overvalued in some sense in terms of the valuation and things, but we're still positive on digital economy as a whole. Like some of the internet company, that's why for US equity as a whole, we are slightly neutral to underweight because of this risk that we are seeing in the region.
Okay, so Chingen actually gives you one tip. That means you are actually less positive on US. Am I right to say that?
Yes, actually, it also reflected in our portfolio allocation where we have lesser US on a relative basis.
So does that mean that you are going to cut more US in your portfolio this year?
Actually, this is what we are planning to do, but we wouldn't be cutting it very aggressively. And it's also quite aligned with our key investment team, as in we will allocate more into the Asia part.
More into Asia.
Yes.
Asia. Do you, other than Asia, are you referring to Asia or China actually?
Including China, and particular like China tech is actually something that we are looking into right now because we know like US equities, especially the tech side, has been performing very well for the past few years, and people are actually ignoring like China tech is actually evolving very fast. There are some like competitive kind of tech company in China as well compared to the US side.
Okay. Now I know you must be waiting for Tao Hong to speak, but I'm not. Now remember the question is major risk people are ignoring in 2026. Okay, it's a risk, but you need to blend your answer to the last poll that I had for everyone. Everyone, it's your phone time again. I'm gonna start the last poll today. You please cast your vote. This is the last poll that we had for this morning or this afternoon. Try to mess up with the result because make it harder for Tao Hong. He always loses his mind in his train of thoughts. Not using bonds. Yes, you guys heard me. Okay, not using bonds more. Okay. Interesting. There are some people using. Okay, there are a few audiences who doesn't know what is bonds. We don't need to answer that. They can figure it out with our colleagues at the booth places. Tactical trading, the little one. Income only. Diversifier, that is a good result. But still, majority of them are not using bonds. So you got 45 seconds to answer to what is your words to those who are not using bonds at the moment in order to address the major risk in 2026. Tao.
Yeah, there's two parts to this question. The first part is what lies in the future, right? And we have no handle of that except recognizing some patterns, right? Nobody ever went broke if they said, I don't know, right? Nobody ever lost money because they said, I don't know. There's a good saying in the market that it ain't what you know that kills you. It's what you know for certain that just ain't so. So what that means is that you got to diversify. And during this process, you got to ask yourself, there's only two types of investment strategy. One, do you want more winners?
Do you want more?
Winners. Do you want to win more? Do you want to be aggressive? Do you want more winners? Two, do you want less losers? That's about it. everybody here in the hall, ask yourself this question. You yourself, everybody has a certain tendency and a bias. In between these two, there's a spectrum. Do you want more winners today, or do you want to keep what you have already? That's the question that I pose to you. So 2026 is gonna be exciting, where I don't know what's gonna happen. But if you look at your portfolio today, ask yourselves, am I gonna go offensive? Am I chasing the winners still today? If I'm doing that too much, should I switch my posture to become a little bit more defensive? And if you feel that you need to do that, bonds can come into your mind, right? For those of you who have not experienced bond before, I assure you, it's like cocaine. You know cocaine? It's very addictive.
Yeah, not halal.
Not. But the idea is, think about that spectrum. More winners or less losers. And you feel that if you need more defensive things into your portfolio today, come to us, come to bonds, talk about bonds, talk with us.
So basically what Tao Hong said is that the biggest risk is 2026, right? It's not Trump, it's not Venezuela, not Iran, not Anwar Ibrahim, or so and so. The biggest risk in 2026 is not knowing what you want. Not knowing whether you want more winners or you want lesser losers. This is the biggest risk, if I were to put it this way. That is the spirit of Tao Hong from his sharing just now, right? Now, we have done 3 polls already, but there's one question that has been floating here. I think only Kin On can answer. Just now you said more people are buying ETFs. People ask, what is an active ETF? And how should I be using that?
Simple analogy of ETF, active ETF, right? Because traditionally, every ETF that's being listed are tracking index passively. That means that the simple comparison is looking at the benchmark, say S&P 500, and then whether that particular ETF is meeting the expectation, basically looking at a report card. But active is a bit different now. There are a lot of fund managers or ETF issuers that wants to do active ETF now. And active ETFs can come in many forms. Some are alpha generating, some are betting on leveraging on more beta of the market. But what happened is, give you a simple example. It is a real ETF that is ongoing. S&P 500, I think everybody know about this index. There are active ETF that actually tracks S&P 500. But they did a bit of differentiation in terms of weightage. S&P 500 basically encompasses 500, stocks that S&P thinks that better tracks the US economy as a whole. So these fund managers think otherwise. He thinks that maybe I add a little bit of smaller cap or somewhere on a growth will eventually outperform S&P. So active ETF being introduced, not to say want to have additional 10-20% return. Active ETF is basically a fund managers having a view that they think that underlying of that ETF, maybe I can add a little bit here and there to generate the alpha for the client.
So for investor, basically, I can get an ETF that is, the fund manager is actively trading the stocks.
Yes.
That means I can hire a fund manager using ETF. That's what you're saying?
Yeah.
Okay, all right.
Yeah,
Thank you for
just
that.
for everyone's information, the managed portfolio is also able to buy into ETF, and currently we are also having active ETF inside the portfolio.
Okay, all right. Now, Chin speaks. Okay. Now, you see, ladies are short, straightforward. Tao Hong is patient guys. Okay, before I go to my final last question to get everyone to share, Kevin, there's one question that has also been floating. Clients with investors with profit in Japan, US, and China are seeing perfect profits right now. Should they take profit? And to combine with that, right, is Asia and China tech riskier than US tech?
Okay, straight to the point. Second question, yes. Why? It's because of Asia Tech, currently in terms of the maturity, they are less mature compared to US techs. So to answer your question, yes, it's risky. But at the same time, the government is showing they're explicitly showing the support into this segment. So these are the catalysts that we are awaiting. To the first question, if you are profiting on all these three portfolios, are you going to take profit? In this case, ask yourself, what's the reason of you invest? If you already hit your investment goal, take the profit. If you hasn't, stay invested. Might be the best option. I think that's pretty much from my side.
Okay, that's a good one. Now, to end this session, I'm gonna have one line to all of you. If you had to explain how to invest properly in your family WhatsApp group chat, what would you say? I leave Tao Hong to the last. Chin Yan first. To your family, your mom, your mom's money. Give it to me.
I think the one line is do not check on your investment account every single day. So if you are able to take out the emotion part from your investing journey, I would say you are winning 90% already.
That means that is echoing what Tao Hong said. Best performing portfolio are the one that belongs to the dates.
Yeah, not that heavy lah here. Just
Okay.
that don't check on it every day.
Okay. Now I go to Kin On. To your mom as well. Your girlfriend, if you have any.
Yeah, as I come from a Chinese family background, right? So poker, mahjong, everything I know how to play.
Also not
So-
halal.
Yeah, unfortunately. So what I mean is that I will put this message in the group. If you guys want to gamble in the stock market, gamble with me. Anything I can play with you guys. But for investment side of it, just buy an ETF. You know, a professional fund manager is there to manage your fund.
But your mom has a lot in fixed deposits. Would you ask her to move?
100%.
Move to
For her age, maybe fixed income.
fixed income, which is bonds.
Yes.
Okay, Tao Hong, hang on. Kevin.
I will quote my girlfriend's questions a couple of days ago.
So you are showing off that you have a girlfriend right now. Okay, sure.
Okay, she asked me a simple question, which I believe that is a commonly asked question. Can I still buy NVIDIA? My answer for this, similar answer. For those who are not actively looking at the market, which she is part of it, I will encourage her, find a belief, investing consistently. Which our platform, we do have the regular savings plan. Every month, if you have 100, every month, just put 100 inside.
So you say NVIDIA is,
No, I mean, find your belief. Not NVIDIA, yeah? I mean, not recommendation.
but she asked you
find a
NVIDIA,
belief.
you're not answering her question.
If you believe in NVIDIA that much, put your money, regardless of the market going up or down, put your money inside consistently.
So the spirit is regular investment
Yep,
because it take out the emotion.
yep.
Okay, ladies and gentlemen. Sorry, Tao Hong. Last but not least, we have Tao Hong. What is the line that you will tell your family group chat to your parents?
I want to appeal for a little bit more time because I feel that this is a very important message for you guys to set out for the rest of the day when you guys are thinking about your investments. So I just want to appeal a bit of time. And I want to come back to ask this question to every single one of you, right? What is the end goal of investing?
So this is how you normally communicate in your family group chat. Okay, carry on.
I treat you guys as family, right? So
I think that deserves a round of applause. Okay, shoot, let's go.
So ask yourself, what is the end goal of investing? Everybody here has a different answer. But if I can suggest one answer, I think I've said it earlier, right? The end goal of investing is to preserve and grow your wealth. And if you start with this understanding, you will not be overreaching. What I mean by overreaching is that you will not do things that would put your lifestyle at risk. Can you follow me? When we start to be too cocky, you will do things like over concentrating your portfolio, taking bigger bets than you are supposed to in certain areas. These are all, whatever we are talking today, these are all tools to help you avoid that. So ask yourself, what is your end goal of investing? And if you can align that and tell yourself it is to preserve and grow your wealth, then I think the rest of the decisions will align very nicely. So that is how I'm going to leave it to you. And I hope you guys enjoy the rest of the day.
Thank you, Tao Hong. What a boring family group chat. Okay, but sincere, I like it. I like it. So I know my apologies for not being able to ask all the questions, but we will still be in the hall. Tao Hong will be in everywhere fighting his trains. So if you like this session, please give all the panelists a round of applause. Thank you so much. This is where we will stop for our session. Thank you so much.